Hello and welcome everyone to another market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Hey, Freddy, how are you?
Hi, everybody. Nice to see you again.
You're staying safe there still?
I'm alive and well and kicking. And
Good.
Yes, I know you're going to say we have a lot to talk about this week. And yes, it is.
And I think we do. I think there is a lot of chatter coming up again through the U.S.-China trade wars and things like that. But before we get into that one, how about the last quarter coming out of the March lows in the market from the coronavirus? We have seen the best quarter in U.S. stocks all the way back to 1998, and this is despite all the negative news we've been having, right?
Yes.
Do you want to allude a little bit to that for our listeners?
Yes. If you look at the headline, you get scared when you start this week, and you get things like the China passed a security law, and then you saw the U.S. retaliated by what did they do again? But they retaliated by saying that they will remove the special privileges of Hong Kong from here, and nobody knows as the full extent of what that means yet. And then you see a lot of tit for tat, like my turn, China do a visa ban back on U.S. officials that they think is involved in interfering with the affairs of China and Hong Kong, whereas the U.S. earlier has said that they would do the same for Chinese officials that was believed to be involved in compromising Hong Kong. So there's just a lot of tit for tat. The market did not care. And the main reason was economic data. We have home sales number coming in real strong, some of the strongest in a long time. Just to put in the context, the market was already expecting a stronger number than prior month, but the numbers came in stronger than the stronger expectations. That's what set the market's direction rather than the politics and the rhetorics.
Yes, and I do want to go a little bit more into the economic data, right? So I think the home sale numbers are one, but I think also economic activity expanded in China now again as well, right? Coming out of Corona. So I think in general, do you see these economic numbers further get better and grow as we speak? Because on the other side of the equation is, cases in the U.S. just going through the roof, right? As I think I think Biden told Trump yesterday that he basically gave up on it, right? On coronavirus, because it's just yes, we had a good quarter. We have good economic data. Is it sustainable, right? Is the question pretty much.
Yes, I do share the same concern, and that's why I still believe that our mid-May reoptimization of portfolios is the right thing to do, because at this level, the market is pricing very shallow amount of recession. And even though the data came in strong, don't forget, when you went from 100 to 50, that's a 50% drop, right? To go back to 50 to 100 is you need 100% improvement. And so you're seeing some big percentage changes here, 20, 30% and all. You're not fully in terms of level back to where you started, right? The pre-COVID level. So I think the percentages could confuse or could mislead people to think that, oh, we're doing really well. I think the gloom and doom, the real economy would stay for a while. We have a lot of challenges. We need to make sure we don't get a second wave. That's number one, right? And we need to make sure the vaccine stats are effective, right? So there's a long road ahead. But we do have the central banks to thank for in terms of saving the financial markets.
Yes, we do at any cost, right?
Yes.
The wording. So that's great in terms of the economic numbers. How much do you think? I think we touched a little bit last week, right? But the next quarter and a half will be dominated by rhetoric from Trump and Biden. Both, obviously there will debates going on. The election is November 11th, right? So I think we're getting closer and closer to that. I think a lot of the stuff that Trump will throw towards China, as well as also a lot of noise, right? Just for the election purposes as well. And we'll see what sticks at the end, right? But do you see this impacting the market, or are they already looking past that a little bit?
I think it's time to look at the stats. And at this time, Biden's lead over Trump is quite severe, is quite wide at this point, which means that the margin of error is less, unlike with Hillary Clinton, right, where it's still the statistics can still swing both ways. So I think that it is, I think the fumble with George Floyd's murder and the handling of the coronavirus has seen 86% of Americans in the latest survey being very unhappy with the direction of the U.S. in general. And Trump obviously takes a lot of blame for that. So it does feels like if that remains that it is with a steady lead with Biden, and if the vice presidential candidate is strong, let's say the likes of Kamala Harris, right, black lady as well, very strong, very vocal. And it's likely she joined forces with Biden, and that could create even stronger foothold for Biden in terms of the black votes, right? Yes. Which is what Trump is really in trouble with right now, given the George Floyd situation. So I'm inclined to say that it does look good for Biden, and if it is the case, I don't think the volatility about the elections and the rhetoric, the fire and fury is going to be the same this time. I think people will start discounting Trump more, and hence the market probably will be less noisy than in the last election.
Yeah. No, I do agree with all of that, and we'll keep an eye on this, and probably we'll be covering this more closely as we go along. We had a question from Basi, one of our listeners. Before I get into his question, if any of your listeners would like to have your questions featured here, feel free to just drop them down in the comment section so that our team can pick them up and Freddy and I can discuss them. But Basi was asking, hey, Freddy, he wants to follow up on his initial questions from earlier in June about commodity and inflation hedging. So he's saying, I never suggested to remove gold, but to further diversify by adding another commodity or another inflation hedge. What are your thoughts on that, Freddy?
Again, I think we talk about the other commodities having the tracking error problem, and the ETF tracking problem is also related to the shape of the curve, the contango, right? And just for other listeners' benefits, the contango effectively prices in storage costs and long-term supply-demand situations. And when it's very steeply upward sloping, it does present a lot of challenge for the ETFs to track, because imagine if nothing happens, you are owning some part of the futures price curve, but it rolls down the curve. So meaning there's a natural decay in the value of your holding simply by result of time passing, right? So that's called a time decay. And the contango was a problem for oil at one point in March. We saw a negative $37 per oil price, right? So in general, gold actually had a good track record of tracking, and that's why we chose it. I would love to see silver, nickel, copper, and other metals, right? But it is at this stage the ETF the development is not sufficiently efficient for the tracking that we have not included them yet, and expense ratios are pretty high and could be very volatile, right? So these are things that we want to include over time, but we want to get more confident with the funds involved before introducing them into the mix.
Thanks, Freddy. With that being said, there's a couple of things I wanted to mention before we finish off here today. We do have a couple more webinars coming up. One is on the 9th of July for our Singapore audience. It's called Financial Planning for Women. It's with a great C-suite panel of women that will share their financial planning journey. That's on the 9th of July, 7 p.m. Again, you can sign up in our description. We have links to sign up. You can also go to our website, Eventbrite, Facebook page, etc. Wherever you can find StashAway, you'll be able to sign up for that. And for the Malaysia audience, we have a webinar called An Inside Look into StashAway. So you can learn more about us. You can ask any kind of questions to the team. That's on the 8th of July, 6 p.m. And again, links are in the description below, as well as on our website, Facebook, and Eventbrite. With that being said, Freddy, thank you for being here. It was good to hear from you and your opinions again. And for everyone else, any questions, feel free to put them in the comments or send us an email to support@stashaway.com, and we'll pick them up next week. Otherwise, everyone else, have a great rest of your week. Bye-bye.
Ciao.
Ciao.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.